Once vowing to never invest in Bitcoin, Mr. Wonderful Kevin O'Leary has done a 180 and has warmed up to the idea of crypto. We are getting the lowdown from the man himself today. Kevin, welcome back to SansburyInvestor.com. Thank you for joining me.
Thank you very much.
So Kevin, just, I have to say, when someone's forwarded me the news item yesterday, and I couldn't believe it because I've interviewed you so many times in the past where you were not a fan of Bitcoin. You had called it a nothing burger, a garbage investment. So I called Nancy, your director of public relations, and I said, is this fake news? And she said, no, it's true. So I was like, I need to get Kevin on and know, why the change of heart.
So when facts change, I change. And the reason that I had never participated in crypto was that I'm in a highly regulated business. I have many investments, including my chairmanship of O shares. As you know, we issue under securities laws, and so many other investments I have in fintech. And I don't play in places where the regulator hasn't decided what they're going to do. And what changed my mind, and I was very specific on it, was I'm in the ETF business. And when I saw that the Canadian regulator and the Swiss regulator and many other regulators, that this has happened just in the last 60 days, have opened up to allow a ETF that holds one asset, Bitcoin. Now that's a game changer. There's no question about it. That allows institutions and individuals alike to allocate. And that's number one on the hit parade that really moved me, because I have actually owned crypto since 2017. Ethereum and Bitcoin, but not really been able to speak about it because regulators really frowned on it. And as you're well aware, this is a very controversial issue. Then, of course, in the last 30 days, we've started to see S&P 500 companies, including Tesla and others, start to allocate onto their FX tables. Let me explain what that means. I own an allocation of other currencies. So US, Canadian, Swiss franc, Euro, British pound. And I do that for a reason. I want diversity in the actual fiat currency I own, and also at any one time, one currency is doing better vis-a-vis the other. The concern I have right now in the US market is a $1.9 trillion, basically free money helicopter out of the sky into the economy. Many people are worried about that. You've seen the 10-year go from basically 90 basis points to 1.4 in a very short period of time. How do I hedge myself against that? Now, I can obviously move into more Swiss franc, which has been a rock star, stable currency. But at the same time, if the regulator is now opening up to allow me to allocate to crypto, why not? And that's why I did it. And so, look, I have taken it's been very interesting 2 days. Many interviews like this. But as I say, I'm a pragmatic investor. I think a 3% allocation for me is reasonable. And then a whole host of questions have to be answered in terms of how do I do that?
And I applaud you, Kevin, because it's not easy to come out after, not liking an asset for a very long time and say, hey, look, now I'm open and receptive to it and things have changed. In the past, you liked gold as a hedge against inflation. Has that changed for you now?
I still own a 5% weighting in gold, 2.5% of it physical gold where I pay for storage, and the rest I use ETFs like I'm going to do with Bitcoin to balance my holding to the 5% weighting quarter to quarter. But now I have that option to do the exact same thing with Bitcoin. And so you're starting to see the stars align on Bitcoin as an institutional asset, but there are other issues to deal with. For example, all of my businesses that I invest in have a sustainability mission. I do not invest in businesses that are polluters or hurt the climate. That is part of my mandate. That's what I do. I don't care, even if I invest in a business that does charcoal, and I have an investment in that, it's one that does it carbon neutrally. For every log they sell, they plant a tree. That makes sense to me. And that's what most investors want these days. I have removed, for example, Chevron out of OUSA. It's not in there anymore. Either is Schlumberger, because the people that buy OUSA as an index, the institutions that buy it, do not want those companies in there anymore. And I listen to that. I have the same issue with Bitcoin. I do not want to own Bitcoins mined in China, because I'm very unhappy with my relationship with the Chinese government regarding my investments there. So I choose not to invest in coin mined there. I do not want to own coin that has a bad provenance. In other words, blood coin, not interested in that. So I have very specific metrics upon which I am going to own coin. The most important to me is to mine it myself. So it's a virgin coin. No one can say to me that you basically mined this and found it from somewhere where they were wasting energy, or they were not carbon neutral, or they came from a country that's under sanction. This is a big deal for me and plenty of other shareholders too. And number one, above all, everybody knows it takes a tremendous amount of electricity to mine coin. I'm not doing it where it's being wasted. I'm going to places, talking to partners that are in places like Iceland and Denmark and Northern Canada, where they don't pay for air conditioning. So there's a lot of this. To get my head around doing this, I've been working for months, but I think my plan is one that anybody would do when they care about the environment.
I just want to dig a little deeper on the ETFs, because we, as you mentioned, we saw Purpose ETF launched by Samsif up in Canada. VanEck set to launch one here in the US. So why the ETF route as opposed to holding, Bitcoin in your wallet, Kevin? Why do you prefer the ETFs?
Well, initially it was an easy way to do it and not have to worry about storage in terms of maintaining a wallet and everything else. But that's not where I'm going to go in terms of building my full and maintaining my full 3% position. I don't know the provenance of the coins held in any ETF. So that's not going to be my preference. My preference is going to be, I'll give you an example, because I'm in the middle of these negotiations now. If you're a miner and you have already established a successful business and you want to optimize it, you want to put more capital to work, come to me. I will invest in your mining operation and you'll pay me a royalty. You know that word, I like that word a lot. You will pay me a royalty in coin, and I will help you build your business. If it's sustainable, if it's virgin coin, if I'm the only owner, that's a great way for me to invest. And by the way, I think many institutions are going to be interested in doing that exactly the way I'm suggesting, because there are many institutions I've talked to, and I have I'm lucky enough to be in the indexing business through O-Shares that I can speak to these institutions, both the sovereign funds and the domestic pension plans. Everybody has the same concern. Let me walk you down the list. Is it blood coin? I can't invest in it. Is it not sustainable in terms of how it's mined? I won't invest in it. What is the provenance of these coins? Were they ever held in countries that were in somehow, not on good terms with the United States, whatever that is, like China right now? I don't want to own it. So I find myself with many partners around me thinking about Bitcoin the same way. Yes, we're willing to allocate. I'm choosing 3%. Others are as high as 5%, sort of like gold. And I may change my mind on that too, based on what happens over the next 2 years. But the point is, every coin I own, I want to know where it came from. And it was made sustainably. And guess what? I'm hearing that ringing in my ear from every institution all around the world.
What do you make of Wall Street's slow embracement of Bitcoin? Michael Saylor starting the trend here. Obviously, we saw Elon Musk with Tesla. Who do you think could be next?
You're seeing the banks discuss this. All the money center banks. Why? Because their clients want it. It's not so much at this point a currency. It's not easy to actually do transactions with it. What it looks like to me right now is it's more of property. It's like buying real estate. You either believe in it or you don't. If you think about the decision tree and how I'm a good example of that. Okay, I decide I want to own Bitcoin. That's decision number one. Then decision number two is what percentage of the portfolio should it be? I would suggest 1 to 5. I'm going in sort of right almost in the middle at 3%. And then how do I maintain that 3%? How can I mine coin sustainably and I know for sure it's not blood coin? That's what I'm working with now. And I need, 3% in my portfolio is a material amount of money. And so I have to go find these coins and know with certainty that as I maintain it, as the portfolio grows in value, I have to mine coin sustainably and no blood coin. And so, and by the way, when I talk to the institutions that I work for now, when I'm indexing OGIG or OUSA, they're having the same dialogues at board level, at sustainability committee levels. They're all having the same discussion. More and more and more, as you're obviously reporting, people are starting to say, I'm going to allocate to this as a hedge against inflation, as a store of value, in some cases as a currency. I find it way too volatile to be a currency. However, I am going to go to 3%.
Kevin, last point, you're joining us from the set of Shark Tank down in Miami. Has Mark Cuban or Damon or any of your fellow sharks given you a hard time over your change of heart?
Half of us are believers in Bitcoin. Mark's come out and said that he will accept it as payment for MAV tickets, for example, and there's all kinds of other, the sharks are looking at it. We're pragmatic investors. For me, it's about allocating. I'm an indexer, so I allocate. I say, if I believe in something, I'm going to buy it to a certain percentage and hold hold my holdings there. My sense is that Bitcoin is either going to perform very, very well over the next 2 years, or it will be, tested by regulators. But I really see at this point, as regulators are opening up in countries like Canada and Switzerland, that the trend is for opening up to this asset class. But it's like you said, either you believe in it or you don't. You have to make that decision. It's binary, yes or no. That's the decision you have to make. And I've made the yes decision, and I've taken lots and lots and lots of flack. You are not the only person that's pointed out what I've said in the past. Unfortunately, in a digital world, every comment I've ever made is already out there.
There's a footprint.
Yeah, exactly.
But you're owning it, so I respect that, and I'm sure a lot of people do. So talk of 100,000 Bitcoin to you doesn't sound so crazy anymore?
No. I mean, will it go to 20,000 first? Will it go to 5,000 first? I have no idea. I've done a lot of work sort of looking at the philosophy of why you would do this with a portion of your fiat currency. And you really have to get past the idea that it's just a hype or a promotion. The mathematics involved here, the whole idea of mining the coin, the difference between this and proof of stake, all of these things that are Ethereum versus Bitcoin, which I also own some of. The other area of interest to me is I formed a team in my organization to look at this. I'm interested in actually interest yield using DAI, using USA, against a Bitcoin loan. There's all kinds of different strategies, but the core of holding is going to be, I look at Bitcoin and say to myself, that is going to be the US dollar of cryptos. It has established itself all around the world. It's the largest market cap. It's just under $1 trillion. It'll always be the leader in my view. It'll take another 100 years to mine the last coin, long past when I'm going to be around. And so during that period, I think it will have tremendous volatility. And at the point in when, let me give you an example. If it became, let's say, I don't know, 20 trillion of value, okay, which you would be basically very, very stable in my view, because you would be being held by people and institutions that are holding it for, again, a hedge against inflation or just storage of value. We're a long way from that. I anticipate it's going to be rock and roll, but I've come to peace with the volatility. I can deal with it now. A 3% weighting is not aggressive, and yet it will capture upside should it work.